Good morning, this is Sameer Gurung from Beta2 Limited bringing you this morning's market report. Day today is the 28th of August, Friday, and I hope everyone's looking forward to the bank holiday weekend. Anyway, what a week it has been, a roller coaster week. Start of the week we saw on Monday an equity bloodbath starting in China, where we saw nearly $5 trillion got wiped off global equities. Since then, we have seen markets reversed and we are seeing a bit of a global rally picking up pace. To give you an idea, Asian shares are actually up for a third day overnight. European stocks also rose and US shares also up a second day in a row. In fact, to let you know on the volatility, start of the week on Monday, we saw European shares plunge the most since 2008. The next day on Tuesday, after a bit of intervention from China, cutting interest rate, we saw equities in Europe bounce up and have the best day since 2011. The day after on Wednesday, it was down again. Yesterday it was up. This morning slightly down. It's pretty much been up, down this week. And in terms of volatility, we've seen out of 4 out of 5 days this week in European shares, the volatility has been as much as 13% for European stocks. So, roller coaster for week and extreme volatility. On the week, it seems like equities are slightly up. However, on the month, it's down. European shares currently trading 8.4% down on the month of August. Expected to be worst month since 2011. Now, this has had an impact on other markets. Commodities are rallying, has been up over the last day or two. Oil jumped up nearly 10% yesterday, and we are also seeing impact of this in the currency market, where we're seeing commodity currencies like Australian dollar, Canadian dollar up slightly, and safe haven low yielding currencies like Euro, Yen, and Swiss franc losing a bit of spark and down slightly. Now, the reason for the rally of the last couple of days is mainly on back of intervention from China. They've been also intervening in the money market, pumping in, buying stocks and boosting it up. At the same time, we also had a couple of decent data coming out in the US. Yesterday we had GDP in the US which showed an expansion of 3.7%, far exceeding analyst expectations. So the focus is shifting towards the fundamentals of the world's largest economy, US, and therefore on back of that, bargain hunters are coming in and propping up shares. But again, the volatility is there. Moving next week, we don't know what's going to happen. We may see the volatility continue, but at least for short term, it seems like the fear is out of the way and we are seeing a bit of calmness back into the market. That's it for today. Thank you very much for listening in. I'll see you again next week.